The year that went by, 2025, will be remembered as a historic one for precious metals, at least, marked by extraordinary rallies driven by geopolitical tensions and structural supply constraints. Let's start with gold. It emerged as a standout performer, climbing more than 60% over the year and posting its strongest annual gain in over 4 decades. It surged to repeated record highs as investors sought safety amid global conflicts, aggressive central bank buying, and expectations of sustained monetary easing in the United States. Silver outperformed even gold, delivering an unprecedented gain of around 140% in 2025, which is its best performance on record. The metal benefited from its growing strategic importance, particularly its designation as a critical mineral in the US, alongside tight supplies and booming industrial demand tied to energy transition technologies. Platinum and palladium also posted remarkable gains, rising up to 110% and highlighting the broad-based strength across the precious metals complex. Currency markets told a more mixed story. The US dollar experienced a volatile year, pressured by interest rate cuts and easing inflation, but periodically strengthened by safe haven flows and resilient economic data. Overall, the dollar ended 2025 relatively firm against many emerging market currencies, even as its longer-term dominance faced questions. In contrast to this, the Indian rupee remained under pressure for much of the year, affected by higher import costs and global capital flow volatility. 2025 highlighted a world where hard assets thrived amid uncertainty, while currencies reflected the uneven paths of global economic recovery and policy responses. All right, for more on this, I'm now being joined by Subhash Chandra Garg. He is the former Finance Secretary of India. Welcome to the broadcast, Mr. Garg. Always a pleasure speaking with you. Let's start right off. Gold. It's had a remarkable year. Is gold still a safe haven at current levels?
See, the gold is currently one of the most valuable asset class. And silver added to that, because the other asset classes, let us say currencies, dollars, or real estate in China, elsewhere, are facing a drought, so to say. And therefore, the gold supply, of which is very small in comparison, its value has to rise. Central banks are diversifying their currency assets from dollar to gold. So there is a lot of demand. And I see at this moment also for the current year that this demand plus will continue in the year. And therefore, I don't think there is likelihood of the gold prices going down. And when the central banks and others start buying, the investors also join the rally, and that demand is also coming. So I think it's reasonably safe asset at this moment.
Understood. Sir, when we talk about profit taking, can it cap gains in early 2026?
That will depend, to my mind, whether the central banks change their strategy. If the central banks start sort of not buying gold, it's unlikely that they'll start selling gold, because the pivot against US dollar continues, because the US policies of importing much less, and therefore they're supplying much less dollar to the world. And there is also the investment flows which are coming down from US and into US, and therefore the gold is unlikely to face that kind of pressure unless, as I said, the central banks, which is in my judgment quite unlikely. So I don't think there is any serious downward pressure coming from any quarter.
Understood. Coming back to gold and silver, sir, like what are the biggest risks to the metals in this year, 2026, if there are any?
Yeah, so the only risk is whether the central banks start sort of putting a pause on gold purchases. China, India, which are major buyers, have been buying gold of last year quite a lot. And if they put a pause, as I said, it's unlikely that they'll start selling. If they reduce the supply purchases or put a pause on purchases, then the investors would also back off, because investors basically join if they see that the prices are going up. If the prices don't go up, they also put a stop to their purchases. So the only risk is this, which is not, in my judgment, a very serious risk. So I think 27 or 26 and 27 is relatively risk-free to my mind.
Understood. And now, if you just look at it from the investor's perspective, any advice that you have for investors, how should they be approaching metals in this year, 2026?
I think number one, they should stay invested. I don't think they should get onto the sale side at all. But if they spot the central bank selling and the major gold buyers, institutional buyers, also getting onto the reduction of purchases or to the sale side, then they may also get into it. But otherwise, I don't think there is any likelihood of what current prices are. We can treat that as the bottom or the floor for the year, and that is unlikely to breach. So they may not have any capital risk in the sense of their value getting reduced. But if they spot the sign, then they may not be bullish over it. They may not buy more. Otherwise, if the central banks keep buying, they may also keep joining the rally and make money.
All right, Mr. Garg, thanks so much. That was the former Finance Secretary of India, Subhash Chandra Garg, joining us here on World Business Watch. Always a pleasure speaking with you.
Thank you.